Alrighty, good morning everybody. Happy Tuesday. Hope you had a good extended holiday weekend there. And we're back bright and early to see what we could do here on the S&P 500 this morning. We're starting with a new week here, so what I'd like to do is jump up to the ultra high time frames and see what the market looks like from up there. So really nothing has changed for the last week, right? Everything's been really strong. So if we look at the previous week's candle here, well, what do you know? It's a really strong bullish candle, right? And then you can even see that blow off top. That is Friday there. That's where we pushed to new highs. We were expecting it to continue to push, and then they pulled it back going into the end of the day, or maybe a half hour after the open there, or right at the open, I should say. But everything looks nice and strong there. We did get through the 6218 we've been watching for a long time, so not much else to really say up here. Things just look very strong, and we're in a very protracted uptrend, right? Usually, if you just look at some of these moves, even the really protracted moves, you get about 1, 2, 3, 4, 5, maybe 5, 6 candles in the most extreme moves, and then you get some type of rotation. So we're now 1, 2, 3, 4, 5 candles up, maybe one more, and then, just looking at the past here, you usually only get 3 to 6 candles and then some type of opposing candle after that. So that's just something to also think about here. It's just been kind of a really strong couple of weeks here. But outside of that, nothing else to really say up here. Everything just looks strong. On the daily, same picture as we had on Friday. We came in on Friday. We looked at where we were compared to the day before, right? And we had a really strong candle. We've been talking about the fact that there's really no signals showing us that there's any bearishness in the market from this daily perspective. And then what happened? So on Friday, what we said was we expected, given that there were nothing really in the market hinting at the bears, we were expecting a break through the high of the day before to continue to push. And what happened? This is Friday's candle here. We did break through the high of the day before, and that was basically in the overnight session. And then remember, the market opened, and literally the second the market opened, rather than a pullback and a bounce or a continue to push, the market just sold off. So like right from the open, it sold off and then kind of went a little sideways towards the end of the day. So that's how Friday went, and now we're coming into this morning. So we're coming out of this very bearish looking daily candle, which, by the way, if we're looking at our daily power levels here, if the market stays below 50% of Friday's candle, let's go back here, then then we're going to have to reconsider what we're doing here. Now, this is the thing. We had kind of a short session yesterday, right? And that's going to make things maybe a little bit more tricky here this morning, only because on our daily power levels, we're looking at the daily power levels for Monday, which was basically it was closed, right? It was a federal holiday, and so it was a very tight, small range. And so these daily power levels that we're working with this morning might not be as relevant as they might be if we were looking at a full day. So just keep in mind, it's just the nature of the beast. I don't think there's any way to really change that. You could just look at Friday's range and kind of mark those levels and be aware of them. But just remember this morning, this is going to be a very, very tight daily power level situation up in here. But the 50% of Friday, if we just move this over to get that level, was right around 44.72 there. So this morning, going back to the daily perspective, if the bulls can't get up through 44.72, 50% of Friday there, well, that's probably a good clue that we're going to get this larger pullback. So that's something also to consider here. And again, from the perspective of these candlesticks, we look at this 4, 5, 6 candles to the upside, and now we've actually got a nice little healthy pullback, 1, 2, 3, and then a lot of times you'll see in these pushes, you have a push, and then you have about 2 or 3, 4 candles of pullback, and then it pushes again. So from the daily perspective here, we do see 3 nice red candles. And remember that this is today's candle, so we have all day for this to change. So we can't really rely on that just yet. But a nice little 2 candle pullback is something we do see in strong protracted uptrends. But that is a bearish candle from Friday, and like I said, yesterday's price action basically we're going to ignore. Outside the fact that when we're looking on shorter time frames, certain swings in the market will also be relevant. But just looking from the higher perspective here, it's kind of like a almost like a Sunday Globex session or something, right? So from the daily, from the weekly, everything looks really strong. We've obviously got to have in-breaths when we're in some type of move. The market has to kind of recuperate and get that strength back to continue to push. So this pullback is, what we would expect. Now, remember on Friday what we said. Nothing really showed up for the bears. However, there was one thing that I overlooked, and I want to mention this before we continue on with this morning's pre-market. And that is before we got into the open here, we had this type of pattern. If you look at the RVI, much, much lower when we were coming into our pre-market here. This was the candle that I believe closed at 6. Hold on one second here. Let's see, this closed at, yeah. So this candle will close at, just make sure, because I mix them up between my Thinkorswim, right? So this candle closed at 6 a.m. and then we were doing our pre-market while this candle right here was in play. And it's just because I have so many things I want to mention that I forgot to point out that, technically, as this candle was forming and we were doing our pre-market, technically we had kind of peaked up to a new high. At least we were a little bit higher from the high of Friday or of Thursday there. And we were much lower on RVI, and I don't think, I have to go back and watch the recording, I don't think I talked about that, and that was my downfall for our pre-market on Friday, was I forgot to mention that potential bearish signal that we were seeing on the hourly, and then arguably the 4-hour as well, although not necessarily my favorite type of divergence, but we did have, obviously this big push down with the relative volatility, even though price was pushing up to these new highs. So technically all these new highs you could make bearish arguments from, and I don't think I really talked about the peak that we made in our pre-market before Friday's open there. So I kind of missed out on mentioning those 2 bearish patterns from the highs, and then look what happened here. Friday was basically a sell-off, right? So unfortunately I forgot to mention that, and I just wanted to point it out for you guys to be aware of. All right, so I forgot to mention that, and we got the pullback. So coming into this morning, outside of our higher time frame perspective that things still look really strong, let's see what the 4-hour is showing us here this morning. So as the market is pulling back, especially even from yesterday's lows and the low of the day yesterday, and then the overnight low, we have a bunch of 4-hour bullish signals. All right, we don't have any bearish signals on the 4-hour chart from yesterday's highs or from our overnight highs. And the only other thing we have is, like I said, the bearish signal I failed to anticipate on Friday morning is there, and so we got the pullback, and that was basically 44.90-ish. And we're now down to the low about 44.30-ish. So a nice 60-point pullback. That's a pretty healthy pullback. About all you can expect having that 4-hour on board. So we've gotten the pullback from the bearish signal from Friday's morning high, right? The high of the morning was basically right when the market opened on Friday. And we've got the pullback. So I think that's about all we can expect from that. And so from the overnight lows and from the lows of yesterday, all 4-hour bullish signals. So what does that mean this morning? Well, we've got a pretty strong line in the sand here, and that's going to be, and actually, let's go to the hourly really quickly here. The hourly is agreeing with all the 4-hour signals from the lows, the bullish signals from the lows, okay? Yeah, there was an hourly bearish signal from the overnight high back on Sunday going into Monday of this week. And there was a bearish signal from the Globex session last night. But then we have all these bullish signals from the lows if you look at where they are. And then we go up to our 4-hour here and you look, they're basically aligning in the same area. So we have a pretty good bullish argument from the overnight low. So that's telling us that we've got our first line in the sand this morning. And let's go ahead and draw this in. If the bulls do hold from the low of the overnight session, which happens to be 44.32 even, so let's do 44.32 here. And I'll just mark, I don't think I have just a random line. We'll just leave it that color. So 44.32 right there, that's the overnight low. If we hold from there, we've got, like I said, a nice confluence on the hourly and the 4-hour. And then remember, the daily is just looking really strong right now. So that is important. If that holds, then we can expect an attempt by the bulls to continue to push and break out this morning. And if they try to push, we've got a bunch of levels above us that could act as resistance. So let's take a look. Well, first of all, and I forgot to put this on before I started the broadcast, we do have the retracement of the sell-off. So if we look at the sell-off from Friday's high, where we got the 4-hour and hourly bearish signal, and then when the hourly closed, we got that big wig up and a very bearish looking candle on Friday. We come all the way down to the low of the overnight session at 44.32. We do have the retracements in there as well. So as you can see, it's pretty messy. First of all, like I said, the previous daily levels, our power levels, are going to be really smashed together here because Monday was a short session holiday, and that's what we're dealing with. So we've got the close of Monday, or of the holiday day, that close that was early at about, I think it was 10 a.m. Pacific here, 44.48 quarter there, and then 50% of that range up at 44.51.75. Now this is what I want to point out here. This range from Monday, we almost want to ignore. And watch, I'm going to tell you to ignore these levels, and then the market's going to come right to the close, or it's going to come right to the 50, and we're going to get a reaction. But what I would say this morning is maybe disregard the power levels, because we're not going to be dealing with, a holiday range. It's just not worth it. So what I'm going to actually do here is I'm going to hide these levels for our pre-market and just look at everything else. Okay, so let's get rid of those and give it a second to load here. And this is what we're going to be dealing with here this morning. We've got the 38% retracement of the entire sell-off. In my opinion, that'll be much more important than looking at daily power levels from a closed session, basically. So, and one other thing to keep in mind here, or something that I should point out, almost like a teaching lesson here. Look at where we bounced on Friday. Basically, the overnight low from Friday's session, which was basically Thursday's overnight session. If you look at that low, look at where we came up to on Monday. If you were trying to trade on, well, actually that was in the overnight session. So if you were up in the middle of the night, or you were in Australia and it was the day, and you were looking at Monday's session, look at where the market found its high and continued to sell off from. The low of Friday's overnight session, or Thursday's overnight going into Friday morning. Right to it. And that's why if we were coming into the market on that morning and we hadn't already come up and tested, let's say, for argument's sake, I would have marked that as a significant area that would make sense for the bears to hold as we push back up, right? And so look at what happened. Right to it. I mean, not to the tick, to the actual low to the tick, but within a point and a half of it, and then we failed. So very, very good teachable example right there. And that's just an aside. I just want you guys to be aware. That's why I look at these major swings that are sitting there naked, because a lot of times they end up becoming beautiful rotation areas. So let's look over here at the retracements this morning. And there's always a caveat when we're dealing with a retracement of a leg. And that caveat is, and I actually like the way that looked earlier, so let's do this. The caveat is that if we do make a new low this morning, we're going to have to redraw the fib, and these are going to shift. If we don't make a new low this morning, and the market holds the overnight low and it starts to really retrace this sell-off, then we're going to have these three levels. And let me just make sure this is pretty exact. What we say it was 32 off the bottom and 93, was it 75? Yeah. Okay. So what do we have up above here? If the market continues to push this morning and we can get through especially this little high right here, right? Then we're looking at the scaffolding level at 44.53.5, which you guys should have on your charts. And then just a little bit further up, and it might just be, it's another 1.5 point pocket right there. Might just be a push right up into 55.5. So we'll put 44.55.5 up. I'll load up my smaller fib line level. Make sure this is exact because I'm like that. And bam. So we've got the 38 up there, 55.5. We've got the 50% at 44.62. Usually I round up if we're coming up into a level. So 44.63, we'll call that. Okay, and then finally the 61. And we all know, you never know with that 61 as well. And again, I'm going to round up from 16 there to a quarter. So there we have the three most important levels above us this morning outside of the scaffolding at 53.5 and at 79.25. Okay, that's what we're looking at this morning. Like I said, you might want to erase the previous daily levels. Again, I might have to eat my words, and sometimes that's what happens. I tell you to not look at a level, and then that's the level that works beautifully. But you know, hey, we can't predict the future here. All we can do is go with what we do, right? So that's what we have above us this morning. I've laid out the five major levels above that make the most sense, and it also happens that 50% of the retracement here back down is also these two major swings that, you know, came down. We got a major turn, and haven't come back to. It happens to be 50%. So I like that we have price action that's bolstering the fibs right in that area. And then let's look at the opposing side of things here. If the market does not hold the overnight lows and attempt to break out again to the upside, or if the market does start to break out to the upside here and maybe find resistance in one of these areas, and then we do finally come down and break that low, well, we've got some levels down below us that we need to be aware of. There's kind of an interesting observation here, and that is if you would have measured the leg from Thursday's low coming all the way up into the high of Friday, and you threw that on your chart there coming into Monday session, the close session, the holiday, well, the market held the 50% nearly to the tick at the end of the day there. It did kind of peak through the 38 and pop, but to the tick hold at 50. And then if you look at the 61 of this very, very discrete leg here, that's exactly where we bounced here in the overnight session, right off the 61. All right, so pretty interesting from a Fibonacci perspective on what two levels were respected there on the pullback. It might just be coincidence, but really nice hold from there. But let's look at what we have down below us now. So we've got through this major swing over here, which basically was another little platform for a bounce here in our overnight session from last night. So that's over with, and now we're going to deal with pretty much all the same levels that we've been talking about for, I don't know, maybe a week now below us. We do have a major retracement. So if we were to look at if we were to zoom out on the 4-hour and look at this whole picture here, we've been talking about all different kinds of fibs that we can be watching, right? There's basically the major low from October of last year all the way up. That's definitely the major fib. And then we have some smaller legs. We have this leg here, the biggest pullback within all this price action down to here, all the way up as well. And I don't know if I have the same one up there. So that's kind of like a really the second largest fib leg that we would want to consider. And then finally, there's a smaller one that starts from this pullback here and comes all the way up. And this was from about 4106 all the way up to the major high we made on Friday of last week. So that fib, you can see it here on the hourly, gives us some deeper retracement levels below us. And it just so happens right now, again, if assuming we don't push to a new high, because we'll have to redraw the fib, but right now, if the market was to pull back really deeply here, it just so happens that the 38 retracement at 43.45 half is also lining up perfectly with this major area we've been watching, 43.46 to 47-ish, right in there, which was this major area of resistance. I think this was our first week together, or the first week we started trading together or doing our pre-markets together. That was that major area that didn't want to break. And then finally at the end of the week it broke and broke out to the upside, which was our expectation there. So that pocket around 45 to 46-ish is the 38 retrace of the major, at least kind of the second major leg we would want to consider. All right, so kind of a long-winded way of saying we got really good confluence down around that 46 to 45 area, and that's the bigger fib. Now, if we zoom all the way in, remember I said we have the small fib from Thursday's low up to the major high, which again we held the 50. We just held the 61 in the overnight session to the tick, and this is where we're at. So down below us, like I said, we've got all the same levels. I don't know if it makes sense for me to list them because I already listed these on Friday of last week, on Thursday of last week, on Wednesday of last week. But we've got the major scaffolding, which you should have on your chart. And then we have a couple pockets here. Remember, I talked about these 67 to 69-ish. We've got this is that major pocket, 45 half to about 48, I guess. So a little 2.5 point pocket there. That major weekly resistance from a couple weeks ago. And then we have that swing high down here, which we've mentioned at 43.22 half. And that's basically it. We've got this other swing at 42.87, which I'll bring out here, 3 p.m. Okay, and then, like I said, everything else is basically scaffolding levels down below. So that's what we're looking at coming into the open this morning. There is a pretty good bearish divergence from this high we just made on the pop on the 4-hour chart, or in the hourly chart here. But that's what we're dealing with. If we can hold around this low, and remember, it doesn't mean that if we peek through it, that it's done with. We could get a peek through, and then it comes back up into that previous daily range, or Friday's range. And if that happens, then that typically is one of those beautiful reversal patterns that brings us back up into that range. So just because the level breaks by a point, a couple points, doesn't mean it's over with. If they pop right back up, that's going to be a decent sign. But if they do get down through here and they can hold and start to come down into these areas, these are going to be areas of potential support. We've got, remember that the magenta dash dot line on our charts is 50% of the last week. So if the bears get the market down through 50% of last week's candle, well, if they can get through that, right, and come down below the structure, then it's going to be a good sign that we're coming down to the next scaffolding area. All right. So this little pocket, about 16 to 20, it's a little 4-point pocket here. It's going to be really important here. So let's go ahead and make this a gray box. That's going to be important here for the bulls this morning. If they do get through the overnight low, which is really our first line in the sand for the bulls, if they get down through there and come here, we'd want to see the bulls hold this if we're going to continue to be bulls this morning. Outside of that, I think we've got everything covered here. Remember that we're basically trading level to level here. When we get good signals, that's when we're typically aligning with those signals until we get some type of counter argument. And that's what we got. Couple things down here could hold for the bulls, including that first pocket, our next major scaffolding, and then the first major swing high that we'll be testing. And you know, from a news, thanks Neil, from news perspective, there's really nothing on the calendar right now. You know, we had a little pre-market thing at 8:30 this morning, but nothing else on the calendar. Doesn't mean there's gonna not be some crazy news event that moves things, but nothing planned right now. We do have Powell speaking the rest of the week, which could have a funky effect on the market. But today, not much going on. Unless somebody else has more information than me, I don't see anything big being dropped today. So that pocket there, that first major scaffolding, this first major swing high down here, you know, all these could be potential areas where we see the bulls find some support. Vice versa, even though we do have a decent bullish confluence from the overnight low, we're actually getting a counter signal right now from this little swing high we just made on the hourly. And then let's see on the 4 hour, I'm kind of curious. Yeah, 4 hour, you just don't have enough resolution to see anything outside of the bullish signal from the overnight low. But if they pop up this morning, don't be surprised if they end up holding maybe in this pocket here. Let's go ahead and load the gray box. So that could be a trouble zone right in there. This could be the 50 or the 61.8 could be trouble. And then finally, even if they break through the major retracements of the sell-off and they get back up to the scaffolding, how many times do we see them come right into the scaffolding and then just have trouble and pull back? So that's what we have as far as our roadmap above, and then our roadmap below we've already established here. Market's going to open here in less than a minute and a half. So on the short time frames, we always have to consider the last piece of the puzzle, which is where we are in relation to the major moving averages that we look at. And as you can see right now, it's all coiled up and we're really close. So again, sometimes we are in a nice trend and it looks like this. So we could talk about maybe the 200 being a good resistance area, and it actually happened to basically be a great resistance last night, but we don't have that right now. We're very close up against these right now. So I think that concludes all the information that we want to have out before the market opens. Remember that anything's possible, so even though there's a decent bullish argument from the overnight low, doesn't mean we're 100% guaranteed that it holds or that we peak below it a bit and then pop back up. You never know if it's just going to be a continuation to the downside here this morning. So I'll leave it at that. And I'll leave the retracement up here just so you see that 61.8. And actually, you know what? I'm going to get rid of it because we've already tested it. So that should set us up here. And I will see you guys tomorrow morning. Happy trading.